Hey guys, Austin and Jonathan here
What's up?
with your next weekly whiteboard. What are we talking about today, Jonathan?
So one of the key things when we're working with our agents and helping their buyers, or when we're working with one of our clients directly, is they want to know, how much can I borrow? How much am I qualified to borrow? What is that amount? And so in the industry, we use this tool called DTI, or the debt to income ratio, to determine exactly how much you're qualified to borrow. So Austin, tell us about DTI, man.
Yeah, knowing how much you can borrow, that's kind of the main thing
That's
we deal
very
with every
important.
day. So DTI, all that means is debt to income ratio. And we shot a video recently about how we come up with the income piece. So if you're curious about that, we'll link that to this video. Go check it out. But what we're doing is we're taking that qualified income number on a monthly basis and dividing that by that borrower's monthly debt obligations.
Gotcha.
So let's just assume, for simplicity's sake, that your qualified income is 10 grand a month. For most loan programs, when we're pre-qualifying you, we're working with a 43% DTI ratio. So that's what we're going to try to max out, is figure out, okay, how much is 43% of your qualified income? That's the total amount of debt you can take on. So in this scenario, the way you calculate it, it's super simple. If you're not a math person, you just multiply 0.43 times your qualified income number. So 10,000 times 0.43 gives us $4,300 a month in max allowable debt.
Man, so $4,300 of debt is how much this borrower would be qualified for. So seems like a lot of house for $4,300, right?
It's a lot of money. Whether or not you can get a lot of house with that is totally dependent upon what all of your other current debt is.
Gotcha.
And so what we're going to do is we're going to pull your credit report. When you apply with us, we're going to look at what other debts you're obligated on. This is not necessarily your bills, so not like your phone bill or your utility bill. These are the debts, the things that you have borrowed money for. So student loans, car loans, credit card payments, those types of items, that falls under here. So if you've got $2,000 of other debt, which is a reasonable amount of money, that drops you down to $2,300 for your future house.
Gotcha. So it's not $4,300 for a house if you have $2,000 of all this current debt here.
Yeah, if you don't have any debt, then yeah, we're working off $4,300. But if you've got other debts, whatever those debts are, we subtract that by your max allowable debt to figure out your future housing debt.
So it's your total debt picture and the future debt of adding this new house that we're looking at.
That's right. And the way we calculate the future house payment is it's not just the mortgage. We have to take into consideration everything that's associated with this future debt. So we refer to that as PITI. You might have heard that term before. That stands for principal, interest, taxes, and insurance. And this is how we calculate that future housing debt. And so principal and interest, this is just your monthly mortgage. Okay, so what is the mortgage payment?
So all these things are in a monthly
amount. What is your property taxes on a monthly amount? What is your homeowner's insurance on a monthly amount? And then if you've got any association dues, homeowners association, condo association, all of these guys are going into figuring out what that number is.
So all of these have to stay under $2,300.
Correct.
So that pie could be sliced many different ways.
Yeah, and if you're curious how much $2,300 could get you, or whatever this number is for you, the easiest way to figure that out is just go download our mortgage calculator. You can find that on our website. Super easy to use. Everybody that downloads it raves about it. It's a great tool.
Yeah, it's also on our links on our profiles on Instagram and things like that.
So go check out that. That's an easy way to figure out what you can qualify for and then what that amount will get you as far as the house goes. So
yeah, so that's how you see how DTI is used to show you exactly how much you can borrow. So if you want us to do the math for you, Austin and I are always here. Reach out, glad to help. And thanks for watching the video. Like, comment, share, and see you guys later.
Adios. Woo.
All right, we're rolling.
Rolling on the river.
Fancy Friday.
Fancy Friday. What are we talking about today?
So we're gonna talk about. Oh wait, I shouldn't. Sorry.
Hey guys, Austin and Jonathan here
What's up?
with your next weekly whiteboard.